Hello, everyone, and welcome to Master Your Money and Mindset. I am your host, Elizabeth Heiza, and today we are here with my very dear friend and colleague, John Foreman. John, welcome to the show.
So nice to be here, Elizabeth.
John is the Vice President of Investments here at Barnum Financial Group. John has been doing work with our firm or working at Barnum for over 14 years now. John works with both clients and advisors in the investment space. So like many of the specialists that we have on this show and many of the specialists that you heard of, John's sole job here is to know the markets. Or know to be able to discuss the markets. And John does that on the back end with our advisors, with our financial professionals, kind of as a consultant and as a partner. But the same thing he does directly with all of the clients that work with Barnum Financial Group, all of our hundreds of thousands of clients who we serve. John speaks with them individually on how they can be affected by the markets. So we are so fortunate to have John on the show because today we are talking about something that John gets so many questions about, which is cryptocurrency. This has been a long time topic in the investment space, and we are finally able to talk about it here. So I couldn't wait to have you on, John.
Thanks, Elizabeth. This is really exciting. First time doing a podcast. So
good.
This is all new to me, but it's very cool.
Good. All right. So John, start first by just telling everybody, you know, I gave your title, but really, how do you spend your days here?
Sure. So I really just sort of view myself as truly like an advisor consultant, right? When it comes to investing, there's a lot of different ways to go about it and a lot of different ways to approach it. And there's not necessarily one singular way that is correct, because every individual client situation is unique. And of course, as a firm and an agency and whatnot, we have a lot of different solutions in our so-called toolbox to address those needs. So I see my role as helping the advisors navigate that toolbox, identify what types of tools and what sort of strategy ultimately is the best fit for either a client's entire sort of financial plan, as it were, or if there's a segment of that financial plan that needs to be addressed and needs to have a specific investment strategy match up with a particular goal or objective. My role is to help sort of guide the advisor through that toolbox, understand how those tools work and how those tools will ultimately solve that particular need in that scenario.
You make it sound easy, like picking a tool out of a toolbox, which I know is not the case from working here. And I'm so lucky that we have you because you do all the work behind the scenes.
Yep. It's been a lifetime of learning, quite honestly. My father was a stockbroker. My grandfather was a banker.
Oh, I didn't know that.
Stocks and bonds were sort of the cornerstone of what we talked around the table at nighttime during dinner. Not exactly the most exciting thing as a, young child, but certainly, built my, love and enthusiasm for the investment landscape. And, having spent 10 years previously with Citigroup, Morgan Stanley, Smith Barney, bringing all of that together in the way that I continue to, move forward and advise clients and advisors is sort of, what drives me every day.
Yeah. So in addition to your 14 years here, you also spent 10 years.
Yeah. It's been a long time.
It has been a long time.
I'm that old.
I would never have guessed. I would never have guessed that.
I am that old. Yeah.
Wow. Well, good. So we get to capitalize on all of your wonderful expertise and your passion.
Yep.
Which is even better.
Yep.
When those two intersect.
Yeah.
So there's a million things we could talk about in the investment space, but I think what our listeners really want to hear about is cryptocurrencies because there is so much myth and mystery that goes along in the crypto space.
Yep.
So I hope that you could help our listeners when they leave this episode, they feel a little bit more confident. If not to make a cryptocurrency investment, they can at least talk about it with more intelligence at a cocktail party.
Sure. Yep.
So that's what we're looking to do today. So, John, why don't you start with just what is it?
What is it? Well,
when I think cryptocurrency,
I think the starting point when talking about cryptocurrencies is almost to like break this down into its two respective parts, the crypto and the currency part. Okay. Right. Now, cryptocurrencies, of course, work as digital money, allowing people to send payments back and forth without, requiring a bank in between. Right. And I think a lot of people would say, well, isn't all money basically digital? Right. Like if I go on, I pay for a credit card and I just stick it in and then somehow money goes from, Citibank to your bank or wherever it goes. That's all true. But the key is that is removing that middleman, right? Removing the bank, decentralizing this, and allowing for a more frictionless transfer of money in between from A to B. So the first piece of this whole thing is the crypto component in terms of how does that all work? If there's no banks in between verifying that you have the $100 in your bank account that you're going to give to me and my bank receiving that properly, how does this all happen? And that all happens through the blockchain network, right? There's this technology that was invented called blockchain that is quite complicated in itself. But essentially what that does is it creates this network of computers that are collaborating together to verify that money coming from a certain address, as they call it, or your account number, going to another account number, verifying you have the money, recording that, and putting it together into this long string of data that is continuously linked over time. And so it's that blockchain network ultimately that powers the cryptocurrency universe. And I'll probably use the term crypto and Bitcoin kind of interchangeably, as Bitcoin's kind of the original cryptocurrency. So when, we think about the crypto component of those, okay, we're gathering all this data and we're linking it together and all that kind of stuff. There's also these very sophisticated algorithms that go over the top to make sure that that data is protected and encrypted, so they can't be tampered with or, modified or anything of that nature.
Okay.
It's a lot.
There is a lot there. Okay. So we know what they are. We know they're a form of digital money that eliminates the bank or eliminates any type of middleman, where we have this blockchain that helps move that data from point A to point B.
Yep.
Okay, so we know that blockchain helps move the data from point A to point B. So is that essentially how cryptocurrencies work?
That's the technology in the background that makes that allows the currency itself to exist, right? It allows the transfer of this digital asset from A to B without the requirement of an intermediary like a bank. So whether you're transferring Bitcoin or any other sort of crypto currency or token or other sort of digital asset, as far as I know, most all of them are leveraging this sort of blockchain technology in varying degrees, but the concept's essentially the same. I think the easiest way to sort of bring this to clarity is to kind of just compare and contrast, a traditional banking transaction versus, say, your Bitcoin transaction. So, right, when you send money from A to B via the bank, right, you're going to use your bank account number and you're going to use the recipient's bank account number. Both banks are going to check those numbers to ensure you have the right enough funds. And then the banks will process those funds. They move from A to B. They land in your bank account. And then the transaction is generally complete. However, oftentimes you'll receive those dollars and there might be a hold period, right? We've experienced that here in our industry quite frequently. And sometimes it can be frustrating. Within a Bitcoin transaction, I'm going to send Bitcoin from my digital wallet, which is just like an address, right? That is a public address, but nobody knows that I own that, right? Just like if we had a bank account number for you, nobody would know that this Elizabeth Heise's bank account is just a string of numbers. Well, your digital wallet or your Bitcoin address is the same. It's just a number, right? It's not, this belongs to Elizabeth. It's a public address, but it's private. Nobody knows who you are. So you send your order out into the Bitcoin network. So the network's going to verify the balances and approve the transaction. The miners, there's this group, these computers called miners that gather up the data, they create them into the blocks, then they race to confirm the transaction. And it's done through a very complicated they have to do this algorithm where they have to almost guess what the code is. First miner, so to speak, to guess the code gets to put that data onto the block and complete the transaction. Once that's complete, Bitcoin moves from A to B. You have it. I don't. And that transaction is complete. So you don't have some of that delay. You don't have some of the friction costs associated with moving money, and it can be done very, very quickly around the globe. So
how do people make money or lose money?
Well, there's making money and losing money just through the volatility of the asset price in itself, right? In the early days of Bitcoin, now Bitcoin was first launched in 2008, 2009 roughly was where some of the first Bitcoin transactions took place. And there's an extraordinary amount of volatility, right? And at that time, Bitcoin was very difficult it took some technical knowledge to know how to essentially get into this ecosystem, as it were, right? And at the same time, Bitcoin was sort of this shadowy fake internet money, this fake internet currency, and famously used to purchase all kinds of terrible and illicit things on the dark web because of its anonymity, right? That private address, me sending from here to, I don't know you, you don't know me.
Yes.
All you know is you got money to sell me whatever kind of things you were selling me. But over time, it gathered adoption, right? It started to kind of go from this shadowy, dark web stuff and became more and more and more mainstream, which is important, right? And that's also where you're starting to see like early, yes, lots of volatility because it was sort of mysterious, right?
Just the name in and of itself.
Bitcoin, you see
crypto.
Yes. And it sounds, it sounds mysterious, right? But as time passed, some of the skepticism started to fade away a little bit, right? And as more and more adoption, took place, you start to see a little bit more stability in the price and of the asset. As that occurs, more and more adoption occurs, you start to see the volatility of the asset starts to mellow out a little bit, so to speak. We've seen that even the last couple of years. You're not getting quite the same, 50% up and down moves.
Yeah.
I mean, at one point back in, mid 20 teens, up 100% in a couple of days, down 100%.
Yeah. That's all you talked about. Yeah.
Yes. People were very excited about that because, man, you look at something that goes up 60% a day.
Yeah.
Like, holy crow. But that general adoption is what's really starting to take hold. And that's where really kind of the concept of currency comes in, right? Which is kind of loosely talked about the crypto aspect of this. And there's tons of information for anybody so inclined to go and figure out how all that works. But really where we're going with here is on the currency side of this, right? We had early volatility. Nobody really knows what it is. Is this really worth anything? It's all going to go to a lot of skepticism. But as that adoption builds, people start to recognize that this has value, right? And when you think about that, it's kind of the same as any currency, right? Like you could look at a dollar bill and say, well, John, that's just a green piece of paper.
Sure.
Right? That's not worth anything. Well,
it's true.
But you will take that dollar because you can trade that for something of value to you. Doesn't buy a whole lot today, but the fact remains. And that would be no different.
Example.
Right? Wampum, same difference, right? This handful of this buys a horse, right? Well, Bitcoin now today buys a pretty nice car. So that adoption and that acceptance amongst the broader population that this thing has value is what's really unique about this. I think one of the key pieces about Bitcoin specifically that has probably made it one of the most successful of all or probably the most widely adopted of all the cryptos is going to be the fact that there's limited supply. There's a finite amount of Bitcoin that will ultimately be in circulation.
So that's the same thing like money.
Like money,
right?
It's like money, but I think more accurately like gold.
Okay.
Right. There's a finite amount of gold in the ground, right?
Yes.
On planet Earth, there's a finite amount of gold on planet Earth. And every day it gets harder and harder to uncover.
Got it.
We have to dig deeper into the ground, whatever it might be. Same thing with Bitcoin is every day that goes by, it's more and more difficult to unlock that next Bitcoin out of we'll call it the Bitcoin treasure chest, right? There's a finite amount in there. As transactions are completed, as these miners validate transactions through the Bitcoin network, the system that powers all of this, those people and those computers that run that get rewarded with some Bitcoin. And that ultimately then makes its way back out into circulation. But there's the finite supply, and every year less and less and less gets distributed.
Who is regulating that treasure chest or opening and closing it?
That's what's interesting about this is the entire network has to collaborate and cooperate, and it is not controlled by any one singular individual, which is kind of a really interesting and unique perspective, right? Versus you think central banks and Jerome Powell's he's gonna print more dollars because we need them. Yeah. Right. And that's why the value of that piece of paper no longer buys hardly anything. Right. And that's but that's where a lot of folks will make that analogy between Bitcoin and gold being, nobody controls the supply of gold.
That's a good analogy. Yeah.
So, and that's where it makes it kind of a unique asset in that way.
I think you touched on this, and I'm getting it, John. You're doing a really good job explaining it. So thank you. If there's no banks, and it's not regulated, how are these transactions verified?
Well, so think about this like, so there's a transaction that needs to be made from you to me, right? And we broadcast this out to the network, right? And to complete that network, there's a secret password. We'll call it a secret password, a string of numbers, call it 5 numbers. Well, all the miners, it's almost like a game of Yahtzee. We're going to put 5 numbers in a cup. We're going to shake it up and we're going to dump it out. And so, okay, it's 1, 2, 3, 4. Is that the number? No. Okay. Do it again. So we're going to race to figure out who can get the right sequence of numbers the fastest. And then once I get the right number, I'm going to basically yell Yahtzee. Yeah. Everybody else is going to test the number and be like, oh, yep, that's the right number. That is the one. John, you're the winner. You get to complete that transaction to Elizabeth. And in exchange for that, you will uncover, like, I don't know if it's a whole Bitcoin or a fraction of a Bitcoin or whatever it might be, but you'll get compensated. And when I make that transaction, all the other participants in the network will see the transaction, validate the transaction, watch that transaction recorded onto the blockchain. And then that is essentially permanent. What's also kind of unique about this whole blockchain thing is each block of data is like connected to the previous transaction. It's almost like DNA, right? There's a little piece of everything going all the way back to the beginning. And that's one of the things that helps give Bitcoin sort of the system and the blockchain technology, its quote unquote security, is that if I were to try to change the last link in the chain, I would have to change every other link all the way back to the beginning, which is seemingly an infinite amount of data.
Okay. That's interesting. Oh, we're happy you're here, John.
The whole blockchain thing and the way that it works is very complex. I'm probably not even doing it justice, but
you're definitely doing it best. You're definitely doing it justice. However, the one thing that I can't stop that is just repeating in my mind is that this is very complex.
It is very complex.
And if it is a space that you want to play, you should definitely work with somebody.
You should definitely work with somebody. You should definitely just educate yourself on all of this, right? And I think that the thing that gives people really this, I think you're having the same sort of struggle with this, is like, there is nobody to call me. Hey, I messed up my Bitcoin transaction.
Or I didn't get paid when I should have got paid, or
right. So, and I think a lot of that has been, as time has progressed, obviously there's companies that have come to market that are making investing in cryptocurrencies, digital assets, Bitcoin, what have you, much more accessible, and making it sort of to a point where you don't necessarily need all that same technical knowledge that you might have needed once upon a time.
Yeah.
And that kind of comes back to the whole acceptance and accessibility, also sort of helping drive the overall value of the asset. So yes, transacting in Bitcoin on your own through whatever tool you choose to use does require, a greater degree of investigation on one's part. I think that, it's you are kind of on your own when doing that yourself, right?
As always, the theme of Master Your Money and Mindset is work with a financial professional on everything that you do, but really certainly with Bitcoin, because it sounds a little spooky.
Yes. Now, what's good for investors is that, again, through innovation, accessibility and investing in Bitcoin has gotten easier and easier. Most specifically in the last, that must have been 2 years ago now, you can invest in Bitcoin or other sort of crypto ETFs, exchange traded funds, which just like you buy the S&P 500 in an ETF, you can now invest in an ETF that will track the price of Bitcoin. So you would transact in that security the same way you would buy another ETF in your brokerage account or your IRA or what have you, right? So the execution of that investment is very familiar to people, right? Okay, buy 200 shares of XYZ Bitcoin ETF, all done. Right? We'll leave all the complicated stuff to whoever the manufacturer of that ETF is. I just know that I now have an allocation to that asset class, which again has been a huge, new source of demand, right? Sure. By making that easier for investors to access.
Sure. I want to transition a little bit. I think there are different types of cryptos, right? I've heard
there's a lot of different types.
Oh gosh. Yeah. Can you narrow it down to like the top 2 or 3?
Well, so the top 2 would be, of course, Bitcoin, right? And then this, in close second is another coin called Ethereum.
Okay.
Ethereum is very much like Bitcoin, except Ethereum has these other, what they call like a smart contract sort of associated with it. And forgive me, I probably won't get it all right, but the idea is like we can enter into a contract, you and I, okay, you're going to do some work for me. And as soon as that work is done and we've got the smart contract hooked up, as soon as that, whatever task you've been assigned to complete is officially done, the money goes, or the ether goes from me to you. You're paid, transaction over, everything is complete. There are a number of other cryptocurrencies out there that are, many of them are uniquely focused to maybe a specific industry, or frankly, a lot of them are sometimes copycats of, Bitcoin or Ether. Some are designed to try to be faster or use less computing power. To me, candidly, sometimes I think these are, different versions of the same thing, trying to solve a problem that maybe doesn't exist yet. Right. Again, that it requires, some due diligence if you're going to start investing into those things.
Oh, definitely. I've heard the terms stable coins or altcoins.
Yep. So a stable coin is again trying to leverage this power of quickly moving money from A to B while taking out the volatility of the asset class, right? Like if I have $100 in my pocket, the buying power of $100 is not going to change a whole lot between today and tomorrow, right? I'm still going to be able to buy, 50 gallons of gas or whatnot. But, $100 of Bitcoin today could be $90 of Bitcoin tomorrow, right? So the stable coin is designed to try to maintain sort of a stable value.
Got it.
So that I can, effectively transmit the right amount of money to you or whatnot, so really trying to leverage the power of the technology and eliminate the volatility of the asset.
Okay. So I have a question, but before I get to that, so is altcoins kind of the opposite where?
Altcoins, I think, are kind of more some of that fringy stuff, right? Where somebody just, hey, it's John Foreman coin. And everybody just sort of jumps on, well, what's it doing? Well, nothing, but everybody wants it for a hot minute and it goes through the roof and then all of a sudden it collapses. And that's not probably completely fair to all the altcoins out there, but there's a lot of weird stuff out there, right? And there's any number of Bitcoin websites. They show you all the different coins that trade. There's a zillion.
There's so many.
And it's like,
and are they categorized into one or the other? Like they act as a stable coin or an altcoin?
Well, there are those out there that are defined stable coins and that are, more high profile that you could identify. And then there's a whole slew of, digital assets or coins out there that just, I don't know. I think sometimes it's just people that day trade in, but I have personally have never really gotten too deep in the weeds on altcoins.
Okay. But essentially these sit in your crypto wallet.
Yes.
Which is like your digital wallet, like your Apple wallet.
Yep.
But sitting in that wallet, they could lose or gain value if it's not a stable coin.
Correct. Yeah. Go up and down just like a stock would go up and down in value inside of your bank account. Stable coins would be synonymous with, say, like a money market fund.
Yep.
Right.
Okay. Again, I have to preface to our listeners, you need to speak with a financial advisor. But John, can you go through high level a few of the benefits and a few of the risks with investing in cryptocurrency?
Absolutely. So I think that if we think about some of the risks, obviously we think about if you're investing in cryptocurrencies directly through an exchange of some sort, right? Like Coinbase or any of these other types of major exchanges, knowing what you're doing, how you're moving money to and from, if you're transacting in the coins themselves, really being familiar with what it is you're doing there. Custody, if you're investing directly in these coins, are you holding those coins in a digital wallet that is as what they would refer to as a hot wallet, where it's like basically on the website? Or are you transferring those coins to what's sometimes known as a cold wallet, which is synonymous with, let's move the Bitcoin from the exchange into a thumb drive, unplug the thumb drive from the internet, and store that in a very secure location. Once it's disconnected from the internet, now it's cold, right? There's no more electricity flowing through it. Being very cognizant of, keeping your public and your private keys secure. It's the same difference. It's the same idea of like keeping your social security number secure, is keeping your, PIN number for your, ATM card secure. So those are some big, basic, basic risks there. Obviously, the volatility of the assets is something to be aware of, especially if you're getting into some of the more other sort of fringy types of assets.
Well, that's another one, like just general security concerns, right?
The security concerns are important,
like
right?
you said, it is
when you go down the path of saying, well, I'm going to invest into, let's say, a Bitcoin ETF. Now the manufacturer of the ETF, whatever major, and there's big reputable institutions that are doing this, they're layering in additional levels of institutional quality security to their Bitcoin holdings, right? That's everything from, they basically break up the private keys into, chunks, and they keep that data, warehoused around the world. And, we're going to have to all come together like, Voltron, and all put our keys in together and turn at the same time to be able to unlock it. You defer all of that responsibility to a big institution like that, which is, again, as I said, for the entry level investor into this space is often a very good way to go.
Nope. That's good. So is that some of the potential benefits?
Absolutely. So, there's a lot of potential benefits, right? We've sort of talked about this decentralization. We've talked about this idea that it is a different form of gold, right? A bigger benefit is sort of the diversification you get in Bitcoin versus, say, other assets, right? And when we think about diversification, there's this word called correlation, like how closely do things move in concert with one another? And Bitcoin can often move in different directions versus the stock market. Now, those correlations have sort of been rising over the years, but still brings another diversification benefit into a portfolio. Similarly, given the growth of the asset that was experienced over time, and maybe the potential for the future, given the limited supply, this could be a return enhancer if, held long enough, and if the, enthusiasm for the space continues to grow.
Very good. All right. My last question, where do cryptocurrencies fall in a financial plan? Or do they have a place in a financial plan or an investment portfolio?
Well, sure. I think that everything's kind of like, there's a sequence to things, right? Like when you buy your first house, the requirements for your first house are basically, living room, bedroom, kitchen, right? Okay, I got to have the foundation.
Yes.
So in my basic portfolio, I have to have stocks, bonds, and maybe some cash.
Got it.
Right. And as my overall life grows and my wealth grows, now I can, if maybe I'm going to add on.
And your risk tolerance grows.
My risk tolerance grows. Now I can add on, be like, okay, I want the bonus room.
Yeah.
Right. And the bonus room could be,
I want to finish the basement.
I want to finish the basement or what have you. You get to a point where like, okay, now I want to put the nice shed outside that doesn't hold tools, but that's where I entertain people. Maybe that's my Bitcoin shed.
Yeah.
Right. Like I'm going to add this on, like, right. It's not like a core strategy, right? It's a complementary asset.
Beautiful.
Once you've got your other pieces of the puzzle sort of fleshed out.
Got it.
That said, there's more and more research being done by all of our partners in the financial services world to identify like, okay, if we do add more Bitcoin to a portfolio, or if we add some to the Bit portfolio, how does that affect the outcome for the investor? And interestingly, there's the research is saying, okay, that, loosely speaking, somewhere 2 to 5% can have an incremental benefit. More than that, you now start to invite more volatility, which can be disruptive.
Sure.
Right. I often make the analogy, like when you're building a portfolio, it's kind of like baking a cake. We have to know what kind of cake we're going to bake. And then we have to know what the recipe is. We got to get the right ratios of flour and sugar and so on and so forth. I think of the Bitcoin as maybe some flavoring that we drip in there, right? A little lavender, a little licorice, right? A couple drops is good. 20 drops, no good.
No good. Okay.
Ruin the cake.
That's really,
I just ruined the cake.
Yeah, that's a really good analogy.
Right.
So it's the cherry on top of the sundae for sure.
It's complimentary for sure.
Complimentary.
It's definitely complimentary.
I love that. Do you find yourself talking about it with clients a lot, or clients still?
Yeah, absolutely. I think it's really where I find myself talking to a lot of folks about Bitcoins, again, about this idea of a currency and like what's giving this thing value, right? And it's that adoption. It's because we generally will accept it as something of value, just like we accept gold or a dollar or something else like that. All the minutia of how it actually works is one thing, but understanding that concept and understanding there's that limited supply, and making that sort of analogy towards like being like a digital version of gold, people start to go, okay, I kind of start to get that.
Yeah. Are there any plans for it to be a little bit more regulated as it becomes more popular, more stable?
Oh yeah, there's been tremendous amount of regulation, at least here in the United States, in terms of the financial services industry with the SEC and the CFTC, to try to help with, regulating transactions and things of that nature, which only sort of helped its adoption. It's actually kind of a good thing.
Yeah. So consumers, I would imagine consumers feel safer.
Feel safer.
Right?
Feel safer. Yes.
That's great.
Yeah.
John, this was so helpful. Is there anything else you think we need to know when it comes to Bitcoin? Or when it comes to Bitcoin, crypto, blockchain? All of them.
We'll skip all the blaming.
Yeah.
We've covered a lot of ground. I think that the key is that this is, it's definitely an exciting space. I think it can be a piece of the puzzle for someone's overall investment portfolio. I think that it's also not for everybody, right? Like, I think it is more of a personalized sort of thing. Yes. Like all investments, but it's not for everybody. Some people just are uncomfortable with the decentralized sort of mysterious network that makes it all work, which is completely understandable. But I think when you kind of get your head around this idea of how it functions and the sort of supply and demand dynamics that go in there, I think that it can be, that's what's appealing to me personally. Sure. Quite honestly. So I think it's something definitely to explore with your advisor to understand whether or not some sort of an allocation may be reasonable given your situation.
Beautiful. John, it's been so nice having you on.
Fantastic.
Thank you so much. I'm so grateful for you and all the great work you do.
Thank you.
For everybody listening, and all of Barnum's information is in the show notes. If you want to get in touch with any of us or with John specifically to ask questions to, you can find his contact information there. Thank you all for listening.
Thanks, Elizabeth.
Thank you for listening to Master Your Money and Mindset. You can find these episodes on YouTube or wherever you listen to your podcasts. Don't forget to like and subscribe if you enjoyed what you heard. You can follow Barnum Financial Group on LinkedIn and Instagram. Thanks so much.
Qualified registered representatives of MML Investor Services, LLC have access to exchange-traded products that hold cryptocurrencies but cannot facilitate direct purchase into this type of asset. Bitcoin and other digital assets are an emerging asset class. The continued development of blockchain technology and the value ascribed to Bitcoin are not guaranteed. Bitcoin has high volatility and a wide range of risks, including changes in investor demand and risk sentiment, liquidity, cybersecurity, and regulatory uncertainty. Bitcoin has the potential for significant or total loss. Past performance is not indicative of future performance.
All opinions expressed by the program participants are solely their current opinions and do not reflect the opinions their respective parent companies or affiliates or the companies with which the program participants are affiliated. Investments or strategies mentioned in this program may not be suitable for you, and you should make your own independent decision regarding them. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as recommendations appropriate for you. You should strongly consider seeking advice from your own investment advisor. Securities and investment advisory services offered through qualified registered representatives of MML Investor Services, LLC. Member SIPC, 6 Corporate Drive, Shelton, Connecticut, 06484, telephone number 203-513-6000.